that the Russell was, I said, wow, we never get all four of them at a high at the same time. Pretty rare time. And up arrows this morning. What do you think?
Really sort of bullish behavior out there, and I don't know if you want to go in this direction, but to me, a little bit excessively bullish. It's one thing to see all the stocks going up, but you also see, the crypto going up and these crypto treasury companies, and so it really is. The animal spirits are loose, I'd say.
Oh, yeah. I mean, everything's sort of going all at the same time. Do you feel like something's got to give? And if it does, do you buy? Is that an opportunity?
Well, look, it's almost always a good thing for the markets, right, when the Fed is cutting rates, right? And they're saying, hey, we're going to do it a couple more times before the end of the year. So you would imagine things might continue for a while, I'm always in the mode of, we work with a lot of retired investors or folks that are close to retirement, and I'm always of the mode of, hey, if the S&P's up more than 100% in the last 5 years, which it is, then, and as you get these gains, it's smart to take some chips off the table and make sure you hang on to them because, go ahead.
I was thinking that, to your point about more rate cuts, and that will continue to fuel the market, and that this may be a repeat of 21 when the Fed just kept cutting and sort of ignoring the inflation.
Right.
We don't know where inflation may be headed, but is that the picture that you see, and are you worried about inflation?
I'm definitely concerned about inflation, and you can see sort of the politics at hand here. With inflation being pretty solidly at 3% across the different measures of inflation, and at the same time, you've got Jay Powell cutting rates. If you would have talked to him a year ago, he would have said, we're not touching rates unless their inflation's at 2%. So his tune has changed. The political environment has changed. And I think there is some concern, especially given the continued very high level of government spending.
And what about AI? Where do we stand in the AI revolution? A lot of the conversations have really surrounded AI still being hot and revolutionary, but that not all AI boats will float. The indifference to some of the fundamentals and cash burn is going to make a difference soon.
Yeah, I mean, there was it's been some interesting articles. I was recording my radio show this week. The top AI companies, the top companies are spending like $400 billion this year. It's a quote from Sam Altman saying, hey, some of these companies are just not going to work out, and maybe his company won't work out, you don't know. But the level of spending, and we're still not yet really at the point where there's sort of the killer application, the thing where we're all going, like the killer application came out for the phone, like, hey, we got Amazon, we got Uber, we got Facebook, we got all these things on our phone, right? The killer application for AI we don't have yet, right?
So today is the day for Apple. The products come out. It's sort of exciting. I mean, there's somebody who wants to upgrade, like me, have an old phone. I mean, there's something really exciting about that. When you think about the Mag 7 names, do you have a favorite in the group?
NVIDIA, you look at it, it's hard to touch their monopoly, right? And the spending that they're having, right? I think Amazon with really broad retail business and also beneficiary of cloud computing, whether or not, wherever AI goes, cloud computing's still here for a long time. So those are some of my favorites,
And then when you talk about retirement, tell me about that, because in your book you have some advice on that.
Yeah, I mean, our book, Wall Street is Not Your Friend, kind of talks about these cycles that Wall Street goes through. Also talks about some of the high fee investments that Wall Street pushes out onto retail investors. Our view for folks close to or in retirement is generally to have less than half of their money in the stock market. And as I said, take chips off the table and be in things that are principal protected for money, for a certain amount of your money, you want that not at risk, especially at times like this where things are going a little bananas.
And when you try and invest in bonds, which are the safe haven of bonds, the steepening yield curve, what are you watching there? Is that still, part of the portfolio makeup, the strategy?
Yeah, even looking at what's happened since Fed cuts on Wednesday, right? You see the 10-year ticking up more.
Yeah.
And I think inflation continues to be a concern. The U.S. is going to continue to have to sell tons and tons of treasuries to finance itself. So, as far as your money that's not in stocks, we like, instead of bonds, we like things that are principal protected, that might have some upside, but also really protect you against downside and give you better inflation protection than bonds.
So we have the proposal now that I think the SEC is going to take a look at this, is the quarterly reports versus biannual reports. The president's looking into that, thinks it may be better for companies to not have to deal with that every quarter. Some investors like to get quarterly reports. Some investors want companies to focus on the work. What do you say?
My view is not a political view, but, I think more transparency is better. I think investors are perfectly capable of looking at the long term. Amazon, which you're talking about, is a good example, right? For years and years and years, Amazon wasn't really making money, but it was on the come, and people understood that. So I'd rather see more information more often.
So you still like the quarterly reports? You think it should stay just where it is? Russell Hackmann, great to see you.
Very
Welcome
nice
back
to see
to the
you,
New York
Nicole.
Stock
Thank you.
Exchange. Russell Hackmann, president of Hackmann Wealth Partners.